So, what is the stock market, geezer? Well, basically, the stock market is where you can buy and sell shares. Shares is ownership of companies or part ownership of companies. It's a little bit like Dragon's Den, where someone comes on, tells the dragons how good their company is, and the dragons say, right, okay, I'll give you £80,000 for 30% of your shares of your company. It's a little bit like that. A company like an oil company will need money to drill in the sea to get to the oil. And basically, what it does is it says to investors, "This is what we think we've got. We think we've got all these billion barrels of oil. So we're going to sell you some shares, and you are part owners of our company. If we find oil, the price of the company will go up. Its valuation will go up, so the share price will go up. So anyone who did buy shares in the company can now sell them to someone else for a profit. And that's basically what happens every day on the stock market. People buy into a company expecting the share price to go up. And then when it does go up or whatever, they can sell the shares to someone else. So this is a short little video just explaining about the stock market, little bits that you might not have known. But after this, you should have quite a good overview. So who is the stock market actually for? Well, surely it's for people exactly like this, isn't it? With tons of money. You need thousands of pounds to invest on the stock market, surely. I mean, when you see people on the news that are investing outside banks up London, etc., all in smart Armani boss suits, loads of money, getting in and out of sports cars. Well, actually, no, that's not the case. People like that do get where they are. Um, yeah, we thought this was quite good, this picture. People get where they are. A lot of the art market, when you think people are spending millions on paintings, a lot of that is taken out of the stock market. But the truth is, you can actually trade the stock market with very little money. There are certain markets that you can trade with only sort of £150. You don't even need that actually, but you're only going to make a small amount of money, but it gives you a good insight, and we can teach you all about that. But you don't need thousands of pounds to invest on the stock market. We can show you this if you get in touch with us, and we can talk you through all of this. But the stock market pretty much is for absolute anyone, even the blonde sat on there, her, I don't even know what relation that is, lap, but I can assume it's not his daughter. But anyway, right, let's crack on. A comment that we hear time and time again is, won't I just lose my money on shares? Am I just chucking my money down the drain? Well, no, you're not. But the stock market is basically, I mean, where do you think the money comes from that we make on the stock market? It doesn't come out of our computer. We are making someone else's money. Someone is losing and someone is making. So for everyone who is losing their money, there's someone who's making, and we've got quite a good little video on this to sort of visualize it for you. But the stock market is pretty much like a seasons. You hear on the news about stock market crashes, and that's probably the only time the normal average person actually hears about the stock market, when it's doom and gloom and the stock market's crashing. But it is like a season. You have a very good season, summer, where the stock market's hot enough, it's going up and up and up and up. But nothing can go up forever. These shares are not worth an infinite amount of money. So what we often get is after a good summer, we have quite a bad winter. And basically that is how it works on the stock market. It goes up and it goes down. It's cycles. The stock market will go up quite a lot, and then you'll have a crash every 5 years or whatever, depending on what's going on in the world and charts, etc. But let's just talk you through this, because this is quite interesting. I think you'll like all this. We've got the chart for Exite Energy, just to show you how the transfer of wealth when you buy and sell shares with other people actually occurs. Exite Energy in 2009 had a period where it was worth 5p per share. If you look on the right hand side of the screen, you've got the share price, so 5p per share, 10p per share, 15, and so on. Along the bottom of the screen, you've got the date, so it shows you when it was that price. So For argument's sake, let's say we buy £10,000 worth of shares at 5p per share. The price then increases to 10p a share. So our £10,000 worth of shares is now worth 10p per share. So that's now worth £20,000. So if we sell, for argument's sake, at 15, we bought at 5, so our shares are now worth £30,000. So say we take our profit, we buy back at 10p per share. Now what could happen then is the price could increase, could go all the way up, and we're making money all the way up. So where is this money coming from? Is the government saying, oh bloody hell, people are buying Exite Energy shares, they're making all this money, we're going to have to print more money and give it to them? No, they're not. This is where the transfer of wealth occurs, because people make money on the way up. But if you're selling your shares at a profit, there's someone there buying your shares. Now, if they buy, the price comes down and they sell, they have lost money, basically. So the money that you made, basically, they lost. So when they sell at this point, there's someone at the other end of that trade buying. There's always a buyer, always a seller. So they've lost, say they lost £10,000. The person who bought will then make that money back if the price goes up, which it did. So the person who lost money and sold near the bottom, someone bought off him and the price went up. So his money was made by the person who made a loss. And that pretty much goes on throughout the market fluctuations. You had quite a bit of a down move here. Someone would have sold at this point and someone would have bought. The person who bought would have made the money that the person who sold lost. It's a little bit complex, but do you see what I'm getting at here? If you buy when it's low, you would have made money from someone who bought when it was high and sold when it was low. Money is just transferring. No money appears from nowhere. Someone is losing money, someone is making money. That is how the stock market works. If we now look at the big debate, investing versus trading. As an investor, you could buy shares right at that point there, because you think the company's going to do well and the valuation's going to go up, and it does. You might think, right, if it gets to £5 a share, I'll sell and I'll take the profit. It might take a couple of years. But if you're a trader, this is the way you see this. You see some big sell signals. You see a double top, referred to our tutorial for double tops, which is a big reversal signal. So we pretty much know that this company is in a lot of trouble with its share price. Also, we've got another very, very obvious pattern called a head and shoulders. If you see a head and shoulders, chances are the share price is about to crash. I mean, we picked that out. That was within seconds of seeing this graph. That investor would not know this information because he's not a trader. He doesn't look at charts. We do. As soon as the price gets below that blue line, which is a line of support, you do not want to be holding shares. Mr. Investor here, he doesn't know anything about this. Maybe he's keeping an eye on the share price, but he sees this and look what a loss he's making. The share price has come right down, a lot further down than when he bought in. Now you've got to imagine he was inspected. He wanted to sell at £5 a share. Traders would have known what's going on here. They would have seen the trouble. When you actually look at the company, they did really well. Investors were drawn in, bought near the top. Traders knew it was coming. They see this company's gone up quite a lot in a short space of time. Is there any weakness in the charts? Yes, there is. So Mr. Investor selling at £5 a share, he's now sitting on a big loss. His shares that he paid over £2 for aren't even worth £1 anymore. So this is why I don't favour investing. You need to work out whether the company's going to do well. There's things that can happen in the news of the company that you can't foresee at the time you buy. This is why we don't like investing. We're not going to teach you how to invest and value companies. If you do that and do it well, fair play to you. But simple techniques can show you how things can turn on charts. Yeah, so the company news as well at this time was quite good until you sort of got to, well, this sort of point here is where the news started turning sour. So there's literally no warning for investors.